welcome back. Well, we promised you a closer look at the currency markets, so let's stick to our promise. The current moves that we're seeing are pretty significant across the board, really. You've got cable higher by 1 1/3% to 163.84. You've got the euro dollar also seeing significant moves. Dollar yen, the Swissy also on the chart here. Let's talk a little bit more about this. Adam Bobroff is a trading floor manager at Foremost Currency, joining us here in the studio. Hi, Adam.
Good morning.
The dollar weakness continues. That's I wanted to say a given, but it's not. I mean, it seems a lot of the moves that we're seeing now are directly linked to some of these some of the commodity weakness that we're seeing as well.
Yeah.
Some of the commodity currency weakness.
Yeah, we've seen, as you say, a big move on the dollar this morning, pushing up towards the 164 level. I think a lot of that's probably to do with GM bankruptcy expected today. Not inspiring a lot of faith in the dollar, of course. And I think this is probably the tip of the iceberg of things to come. You know, we saw the banking sector go to the wall earlier on this year, and now it's the turn of the knock-on effect that we're going to see over the course of the coming months. And realistically now, we're looking for 170 by the close of the month, maybe next month as well.
Do you really think it's GM bankruptcy? Because if that would be the case, we would see a reaction in the equity markets, wouldn't we? I mean, isn't this just a pure commodity play that we're seeing in the currency markets now? It has nothing to do with GM.
No, I don't necessarily think so. I think GM is a key indicator. You know, it's obviously one of the largest car makers, and therefore in terms of confidence in the overall economy there and confidence in the dollar, that does have a significant knock-on effect. But as you say, of course, commodities seeing a huge surge at the moment as well, which is a factor.
Adam, I don't know if I'm alone, but I feel a lot of this stuff has gotten ahead of itself. I mean, is there going to be a real short-term tightening trade before we get back to trend again?
I think this probably is the trend, actually. We may well see a bit of a retraction back towards the 160 marker, of course, a bit of profit-taking, but I think this probably is the trend over the coming months. You know, the dollar obviously has moved considerably against the pound, for example, this year down towards the 135. And now, I think it was overbought at that stage, and now it's being sold off, of course. So, as I say, I think the trend really towards the 170.
Adam, it's more here in Asia. Any impact in the currency markets today coming from Mr. Geithner's comments to the Chinese, reassuring them, saying he believes in a strong dollar policy?
Yeah, it's obviously he's out there trying to reassure them. The key there, the budget, he wants to try and reduce the deficits there. I don't think I think he's really going to struggle to bring in any confidence on that front. And of course the yen has dropped off as a result this morning, breaching down towards the 94.50 level. And I think realistically that one again to move down towards the 93 level over the coming month.
If you want to get in on the dollar play, for an example, let's say that you think you could short the dollar, what would you short it against?
Short it against the pound, certainly at the moment. I'd be buying yen probably at the moment as well, as that one looks to move down, but I'd be shorting against the pound, definitely.
And the some of the alternative higher yielders out there, we've seen big moves in the Aussie dollar, the Kiwi as well. We've got the central bank in Australia set to decide on interest rates tomorrow. Is there a play there?
Yeah, absolutely. Obviously, the move to the high yielders as carry trades look to come back into play. Last month, we saw an increase in risk aversion, which is whereby people are now looking towards those carry trades where the Aussie dollar, the New Zealand dollar, and indeed the euro at the moment are a high yielder, which again will knock on to the yen, whereby that's a low yielder, moving out of yen into Aussie dollars. So that one should continue on that trend down as well.
Interesting. Adam, thank you very much. Adam Bobroff, the trading floor manager from Foremost Currency.